Unbreakable moats, a sustainable competitive advantage. Once you have identified a company with an excellent financial track record, you need to determine whether it has what it takes to remain a winner in the future. The method to determine this is to look for a competitive advantage which protects a company during recessionary times. A competitive advantage is similar to a moat that ringed and protected castles in medieval times. Just as a moat prevented enemies from entering the castle, a competitive advantage prevents competitors from eating into the profits of a company. So, what are the examples of such competitive advantages? The first example is a brand. Ever noticed how certain products are closely identified with one particular brand? For example, thinking about toothpaste immediately brings the brand Colgate to mind. Or thinking about razors immediately brings the brand Gillette to mind. Firms such as these have established strong brands in the public consciousness. These brands help create a barrier to competition, a moat. A strong brand helps a business command market share and higher prices. Another example of a competitive advantage is a patent. Some companies have products that are patented. No one else can manufacture or sell these products without paying some royalty to the company. These companies have no competition for that particular product. Pharmaceutical companies with patents have this kind of competitive advantage. Another advantage that companies can enjoy is that of a monopoly for their products or services. They are free to set their own prices, and people still have to use their products in a recession. For example, if you want to advertise a product on South Indian television, there is only one logical choice: Sun TV, because of the high viewership it commands. We are all creatures of habit. We do not like to change, especially if the change requires a little bit of effort. The fourth competitive advantage that a company can have is based on this and is called switching. It means a company has a product or service you are so used to that changing or switching it is either very difficult or not worth the effort. A common example is Microsoft Windows. It is still being used by the bulk of computers the world over. Infosys and TCS get around 90% of their business from repeat clientele, thanks to this switching moat. Finally, it is very difficult for anyone to compete with a company which can sell its products profitably at a low price. This enables it to offer heavy discounts on its products. These are the 5 different kinds of moats that give a company a strong competitive advantage over its business rivals.